welcome back everybody for our last session of this conference. I really hope you enjoyed the parallel sessions, took a deeper dive into funding, into crisis readiness, into risks, and even in session 2 into biology. But to find out what they discussed there, you'll have to watch the videos tomorrow on our website. To close today's conference, we have a special video message from Luís Albuquerque, European Commissioner for Financial Services and the Savings and Investment Union.
Ladies and gentlemen, it is a real honor to address you today as we mark 10 years since the establishment of the Single Resolution Mechanism. Over the past decade, an enormous amount of work has gone into building this project, and it has truly proved its worth. It stands as a strong example of how European member states can come together, cooperate, and build trust in one another. From my own personal standpoint, I am delighted to celebrate this milestone. As a finance minister during the turbulent years of the Eurozone and sovereign debt crisis, I experienced firsthand what it meant to resolve a bank without harmonized tools for managing failures in an orderly way. That is why, for me, today's anniversary represents an occasion to highlight real progress, real lessons learned, and real stability gained. Milestones like this are also moments for reflection. They remind us of why we worked so hard to strengthen Europe's financial stability through reform and coordination. They underline the lessons we have taken from the past and reinforce that while we cannot predict the future, we can certainly prepare for it. And we are stronger when we do so together. In preparing for today, I looked back at the many achievements of the SRM since 2015. There are plenty to be proud of. So, to mark this anniversary, I would like to take a moment to highlight some of those milestones and the impact they have had on Europe's financial system. The first success that I believe deserves recognition was the creation of the SRM itself, which means we need to go back even further than 10 years, to 2012, when this proposal was announced as part of the banking union. The aim was to break the doom loop between banks and their national governments by creating a single EU-level authority with the power and resources to manage bank failures. Before this proposal, a joint approach to bank resolution in Europe was unthinkable. We simply had not taken such a big step in terms of our financial market integration until that point. And turning this proposal into reality was not a smooth process. It was highly political and contentious and needed to be handled with care to ensure that the outcome would be something that could be effective in practice. It also took significant political will. This achievement gives me renewed confidence as we put forward our proposals to bring the Savings and Investments Union to life. Just as we succeeded with the Single Resolution Mechanism, our progress now depends on member states recognizing the tangible benefits of moving past narrow self-interest and towards true European financial integration. The Single Resolution Fund is another considerable achievement under the SRM and deserves to be mentioned. The fund is a powerful financial backstop financed by the banking sector itself to protect taxpayers from future bailouts. By building a shared, mutualized fund, it represents a profound step forward in trust and solidarity. The fund began its build-up phase in 2016 with the goal of reaching a target size of at least 1% of all covered deposits in the banking union by the end of 2023. This target was successfully met, with the fund reaching approximately 80 billion euros by late 2024. Additionally, the national deposit guarantee schemes have together already collected 55 billion euros. This creates a safety buffer contributing to the resilience of our banking system to possible shocks. The Single Resolution Mechanism's watershed moment came in 2017 with the resolution of Banco Popular in Spain. At the time, it was still untested, and there was widespread concern about the possibility of yet another public bailout in Europe. The result was a swift and decisive resolution of the bank, thanks to the efforts from the Single Resolution Board and the Spanish national authorities to implement a resolution scheme with no delay. The entire process was completed overnight, and no public money was spent in the process. Europe breathed a sigh of relief that day. The first orderly resolution of a major European bank without a public bailout sent a powerful message of stability and trust. It demonstrated the EU's commitment to the new rules and provided concrete proof that the doom loop between banks and member states could be broken. Thanks to these successes, our European banking system is now strong and stable, and we can have confidence in its resilience. Banks have been increasing their loss absorption capacity steadily. As of end 2024, the minimum requirement for own funds and eligible liabilities resources of significant institutions in the banking union were around 34% of total risk exposure amount on average. While we can hope and work towards the best outcome, we have to prepare for the worst. And in this context, it is important to mention national authorities and their important work alongside the Single Resolution Board to put in place detailed resolution plans for each banking group. In June this year, the EU co-legislators also reached a political agreement on the review of the Bank Crisis Management and Deposit Insurance Framework. This reform will improve the way we deal with the failure of small and mid-sized banks and is an important milestone to advance the banking union. Looking ahead, there is still more progress to make. Our banking union remains unfinished, and while our banking market has become stronger, it can and should become even more resilient. A key step will be finding a way forward on a European deposit insurance scheme, a task that President von der Leyen has specifically entrusted me with. This is essential to give citizens and businesses full confidence that their bank deposits are safe, no matter where they are in the Union. We are also working to create a more integrated and globally competitive European banking sector. A genuine single market for banking can unlock enormous potential. It could allow our banks to operate seamlessly across borders and, in doing so, deliver better and cheaper services and more affordable financing for households and businesses alike. Our work towards a more competitive Europe also means simpler rules. Commission President von der Leyen has made it clear that simplification is a priority for the rest of this mandate and will be a key lever to bring about a more competitive European economy. This ambition lies at the heart of our work on the Savings and Investments Union. And to drive it forward, the Commission will publish next year a comprehensive report on the state of our banking system in the single market, including an evaluation of the sector's competitiveness. In closing, I want to commend you all on your hard work and wish you continued success in ensuring a secure and resilient financial system in Europe. Thank you.
Thank you to Mario Luís, Commissioner, for this inspiring speech to close our conference. Now, just before we invite you to celebrate for those in the meeting room, obviously not for those online, to celebrate with a glass of something at the hand this anniversary, I would like to invite my fellow board member, Radek. Radek is one of the newest board members, and I thought it would be interesting to listen to your first impressions about this session, this conference. So what was of importance for you participating for, I suppose, the first time to this conference?
Thank you, Dominic. It is certainly very different to stand here on stage than sitting in the audience. The positive thing is that I see so many familiar faces here. And I try to speculate that there must be some attractivity in resolution planning. But the reassuring thing is that I see so much dedication and so much professionalism. Thank you.
Any surprise? Something you were...
No.
No,
Well, actually,
we were not surprised.
One surprise, if I look 10 years back, one surprise, and in retrospect, there's been a passage of 10 years, and I can say that the acceptance of the framework has been smooth. I think not only by the banks, the industry, but also by investors, analysts, the consultants, the rating agencies, and this, another speculation from my side, this can speak for a reasonably well-drafted regulation.
And beyond regulation for the future, how do you see, building on what you've listened today, how do you see the next priorities, the next steps for us?
Definitely banks will be more resilient in the next years. The past 10 years have been marked by the buildup of TLAC and MREL, by the fund being fully loaded, and by banks buying in our expectations. The next 10 years will be marked by more testing of our joint, and I'd like to stress that, joint preparedness. And I would like to thank you all for being on this journey with us.
Thank you very much, Radek. But before finishing, I will ask you to stay with me, because obviously the single resolution mechanism is also made not only of regulations, institutions, but also of men and women coming from the different institutions, members of the banking union. So what we did some months ago or weeks ago, I don't remember, is to organize a sort of quiz between the staff members of the single resolution mechanism, and so coming also from the national authorities. And so the winners of the quiz, we've decided to invite them personally to attend physically this conference in person. And I think it's exactly the nice moment to finish this session by offering them the famous medal we offered already sooner to our colleagues, all the board members and current board members, the previous board members and current board members. So I will ask the winners of our quiz, and the quiz was extremely complicated, so the winners are really the best resolution experts in town. So I will ask them to join us to the stage, and we will give them this very small gift, if they agree. So please. So you can take this one, and I this one. Welcome. So, this is our pleasure to thank you for your contribution to the single resolution mechanism. Without you, there would not be any resolution expertise in Europe, in the banking union. So we are very proud to work with you all together, and we are very happy to offer you this medal today. So thank you very much.
We'll start with thank you.
Thank you so much.
Thank you.
Thank you very much.
Thank you.
Thank you very much.
Doing a good work. Thank you.
Thank you very much.
Thank you. Stay with us.
Thank you so much.
Thank you. You're doing great work.
And thank you very much. I will continue this way. Okay. Thank you very much.
And the last one. Thank you. Thank you.
The last one, but not the least. Thank you. Thank you so much. And now, that's the good moment to celebrate all together with a glass of something with some bubbles. And I wish you a very good end of this conference. Thank you very much.